Gold, first of all, missed some opportunities, was overall good, just because we were completely bullish. As you know, we have big manipulations on gold. When was the last manipulation before this breakout structure? The last manipulation was this one to the downside. And so that manipulation, because order blocks, supply and demand levels are basically, the definition is the last down move before the big up move, or vice versa, the last up move before the big down move. Here, and even better, it is even a better order block or supply and demand level if that move, that order block was also a manipulation. So in this case, this push to the downside was a manipulation to take out orders before the big push to the upside. This is a huge demand level, I know, but still, this is a good demand level. And this could have been our territory for actually buys. Going on lower time frames, we can actually see when we should enter. We have a clear downtrend, so we don't want to enter. Downtrend, 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 downtrend. Still downtrend here, because as you can see, the downtrend is still intact. Of course, we are breaking this level, but that's not enough, in my opinion, to actually enter a trade. We should break this level. We finally break it and never get a chance to enter on a retracement. Of course, on lower time frames, like the 5 minutes, we could have taken some risky positions from here when we changed the internal market structure. But the external market structure, the 15 minutes, which is the one that I'm looking at, was not broken. I mean, it was, but we just took off. We didn't really have a retracement. On 5 minutes for aggressive entries, which could have been fine, of course, it would have been right here. So downtrend, 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 push to the upside, breakout structure. Oh, wait, actually. Breakout structure right here, retracement to the last demand that created this breakout structure. Perfect, buy to the upside, okay? So this could have been a good opportunity, risky opportunity. I would have preferred to see actually a break of the major structure up here, and after that break, a retracement, possibly here, and a trade from here. This didn't happen. We're not looking for trades anymore on gold, at least for today. We have a comment. This looks like Wyckoff on gold. Yes, it is. 1 minute strategy, Wyckoff, whatever. The point is that if you want to be my student, we don't need to look at Wyckoff like everyone else does. They look at every single move. They look at, automatic rally, secondary test, actually buying or selling climax, automatic rally, secondary test, spring. Sometimes you have a UT and UTED, then test of the spring and continuation. We don't need to do that. I mean, if you like to know every single move of that, fine. What we need to do, well, basically Wyckoff is an accumulation. So sideways movement, basically a box. Okay. Manipulation below that box, below that accumulation, below that range. Manipulation. After that manipulation, we need to see a change of structure in our desired direction, which happens here, break of structure. Okay. Retracement to demand, which is the test in the Wyckoff schematic, retracement to demand right here, continuation to the upside. So if you like to know the little names, great. Just make sure you don't get confused, because you get confused when you need to see all the, buying climax, automatic rally, secondary test. Also because sometimes we consolidate a little bit more. Doesn't necessarily mean that we just consolidate for the selling climax, automatic rally, secondary test. Sometimes we consolidate more. We just have a big consolidation, and then we have the manipulation, which is the spring, which is the UT, UTED, whatever. And then we have the break structure and the entry. So yeah, that's the point. We have another question. Good question. I covered this many times. Hey, Edward, I just signed up for your course. I have one question. Should we enter in higher time frames, even though the higher time frames show a different trend than the lower time frames? And this is the point of us using my strategy, and I will cover it right now. For example, higher time frame shows uptrend, but lower time frames is in consolidation or downtrend. This is the whole point. Make sure to watch the whole course because there are questions there are answers for this question in the course. But basically, if we look right here, this is breakout structure to the upside in the 1 hour. We are in an uptrend, okay? Higher highs, higher lows. So we are expecting a higher low from here and therefore to execute buys from here. So we go on lower time frames to look for this confirmation. Let's go on the 15 minutes, for example. And if we go back, we can just see that the lower time frames are in a downtrend. And this is the fractal nature of the market. You will always see this stuff, of course, because lower time frames have a different direction compared to higher time frames. So downtrend in the 50 minutes with lower lows and lower highs. So what do we need to do to actually enter a trade? Have confirmations on lower time frames. We keep in mind that the higher time frames direction is a buy. So we want to trade with that direction. We want to enter a buy, but the lower time frames are showing confirmations for sells. So we wait, and we can mark our structure. So we have the high, the previous high, and the previous low. Do we break this high? Do we go bullish? Let's see. No, we break the low. So we create a new lower low and we mark the low, okay? So high, low, lower high, lower low, okay? So now if we break this high, we are changing structure. If we break this low, we continue with the downtrend. Okay, we can just consider this one as a whole low. Here, as I told you already, we break in the minor structure in the 5 minutes. We do have breakout structure in 5 minutes again, but we were looking at the major structure. Okay, what happens here? Change of structure. After this point, we understand that the lower time frames, the 15 minutes, is aligning with the 1 hour, and we have confirmation for buys. We can finally say that the 50 minutes has aligned with the 1 hour, and we are not in this downtrend anymore, and we can finally look for buys. As I showed you, I was looking for buys at possibly demand areas. Could have been this one, could have been a lower one, could have been this whole zone right here, but we never retraced and we just took off. Okay, but as you can see, the confirmation was there. Okay, this is the point. Can the price return to the zone of demand? It can. I'm not sure if I'm going to trade it if it returns to demand, because what I wanted to see was breakout structure, retracement to demand, and then continuation. If we come back to the demand after some time, we might have already finished the reasons to continue up, because it doesn't necessarily mean that we will create new higher highs. If we come back to my demand area, what I'm doing is look for confirmation, because the same thing will happen on lower time frames. We might be in a downtrend and maybe we reach this demand, and I'm not going to look for buys until the lower time frames will show me a confirmation to actually buy, something like this, with this breakout structure right here compared to the previous size, retracement to demand, and then an entry. Okay, so I'm not entering right away if we come back to demand, but I can look for an entry, yes. Okay.